possibly. I'm going across to Somit, who's put together this fantastic data on how every time there's been a war in the last decade, equity markets have responded.
So we have seen the data for the last 4 events that we have seen so far. Now, if you get the graphics, crude here is one factor where we have always seen an increase in the prices whenever there's a war type event. Libyan civil war back in 2011, crude prices increased by 25%. Iran nuclear sanctions, crude prices increased by 14%. Kores attack that we had seen, that time also crude prices increased by around 15%. And when Russian invasion of Ukraine started, that time also crude increased by 32%. For all the other variables that we have seen, be it the Nifty, Indian Rupee, FI flows and VIX, there have been divergent flows. But when it comes to crude, they have increased in all moments. Now, if you look at Nifty 50, the first 2 events, that is Libyan civil war and Iran nuclear sanction, Nifty was up around 6 to 7% in both the cases, and Rupee also appreciated around 1.8 to 3.3% in both the situation. When the attack happened in one of the Aramco refineries back in 2019, Nifty had fallen around 1% for a brief period of time. Rupee had depreciated by around 0.9%, and when the Russian invasion of Ukraine started, Nifty had depreciated had fallen by around 6% while Rupee had depreciated by around 3% during that period of time. Now, if you look at the FI flows and how the volatility index was, FI flows again in the first 2 events, there were buy flows, $6 billion of buy flow coming in when Iran nuclear sanction was imposed, $2.6 billion of inflow when Libyan civil war started. And when it comes to the volatility index, that was up 25% during the Iran nuclear sanction. There was when there was the Libyan civil war, that time we had seen a decline in the volatility index coming in by around 10%. But when the Kores attack happened, that time we had seen a very minimal FI outflow, just $0.1 billion. But when the Russian invasion of Ukraine happened, that time the FI outflow was massive, around 6.4 billion. But that was not only because of the war event, there were also multiple other factors that led to this FI outflow during the Russian invasion of Ukraine. And when it comes to the volatility index, 6% uptick during the attack, and Russian invasion led to 16% uptick in the India volatility index. Now, we also went to the sectoral index performance similar to the benchmark. Major negative impact was seen only when the Russian invasion of Ukraine started. Consumer discretionary and financials dropped the most, while IT and utility were the only 2 indices that managed to stay in green during that time period.